Hey everybody, it is Monday, March the 20th, and it's time to catch up on what's going on with the Feds and interest rates. So first thing I thought I'd do is talk about kind of what happened last week, maybe the things that didn't hit the news. That's always the fun part, right? So last week, the Fed loaned 300 billion out to banks just last week in order to keep some banks that they had ID'd. They had identified that there are about 186 banks that were not in good financial shape. And as a result, they just started loaning all kinds of money out to these banks to basically to keep them solvent, keep them in good shape. So that was a big thing that happened last week. And one of the interviews for Janet Yellen, she was in front of Congress. And I thought one of the more important questions that she got asked was, I think a senator from Oklahoma asked her, said, hey, if you bail out Silicon Valley Bank, and if you don't remember, Silicon Valley Bank was about 30 billion. They determined that 93% of that money was above that 250,000 threshold that they normally guarantee. So only 7% was covered by the FDIC, and yet they decided to guarantee the funds for everybody. So the gentleman asked her, are you going to make that same guarantee to all my little community banks in Oklahoma so that the investors there feel like they had the same type of security? And what we got was not the answer that you're probably going to be looking for. It was kind of bounced around a little bit. And basically she came out and said they will only protect the banks that are deemed systemically important, whatever that means. So it's a little bit vague. It didn't really give a lot of confidence in the industry. So we're going to track that and kind of see how things progress. But let's take a look and see what's happening right now with the market and rates. One thing I want to talk to you about is called mark to market. And why these banks had such a hard time. So they were buying these bonds at 2 and 3% when mortgage rates were low, buying these mortgage bonds and treasury bills, and rates went up. So how does that impact them? I got a little thing here I think that will really help you understand a lot better. But let's just say that Barry lends Dan $100,000 at 3%. So Dan's going to pay Barry simply $3,000 a year. Now, what if rates go up to 6%? If you're an investor and you want to get $3,000 back, how much money would you have to invest at 6% to get the same $3,000 a year? Well, heck, now you only have to invest $50,000. So that $100,000 that you're holding isn't worth nearly what it was if you were trying to sell it on the market. So mark to market means that they're going to have to sell at the current market. What the Feds say is, hey, you don't have to use mark to market. You can count it at the original value that you purchased those bonds at. So what happened when these banks had a little bit of run on money and they had to sell some or liquidate some of their bonds, they took an absolute bath on them. And so you can imagine if you had a couple of $1 billion in that you're just going to take an absolute beating. So that's what's happening with a lot of these banks. They're holding on to these low bonds, and as they have to sell to kind of liquidate to come up with cash, that's what happens. So these 186 banks, they're not having to sell right now, but I think what the Feds did was they identified them that if they had to, they could be in some trouble. So we're going to keep an eye on that and keep plowing forward. Let's take a look and see what's happening in the bond market today. I think the first thing is we got to take a look at, where are rates going to go based on what's happening this week. And we see it's that time again, Fed interest rate decision on Wednesday. I kind of think they're going to raise rates a quarter point, but we'll see. And then we have the jobless claims that come out on Thursday. So those are the two big things that are going to impact rates. Let's take a look at the chart. I want to show you something. Remember, I told you we might have a market reversal right here, and sure enough, that's what we had. And I've always said, look, these candlesticks, they keep improving, but they keep falling back, improving and falling back. Well, I think that if you look at this resistance level right here, we keep going up and falling back. I think we're going to sit on that resistance level and maybe get a little floor support. So I think we may be trading in this area right here for the next couple of days. And then I think come Wednesday, we're going to have to see what the Fed does and kind of get an update. And of course, I will give you another update on Friday to tell you what happened this week. Hope you have a good one. Have a great week, and I'll talk with you soon. This is Randy McMullen with Amstar Mortgage. Oh, and by the way, please like and share. Thank you a lot.